This is the 3 black crow candlestick pattern. This is a 3 candlestick pattern, which means you need 3 bearish candles to be a valid pattern. The prerequisite of this pattern is that the first candle is bearish, the second candle is bearish and bigger than the first one, as you can see in this diagram. This is the hypothetical example. We'll be going to the chart soon. The third candle is big bearish candlestick with small or almost no shadows at all, which is completely normal. The 3 black crow candlestick is only found in uptrends, and the interpretation of this pattern is that the trend is about to change. Sellers are active, the sellers are confident, and the buyers have left the room. This is the opposite of 3 white soldier candlestick pattern. Let's go to the chart and find a live example. I've already marked this for you. See, the price was in uptrend. The price was in uptrend. This is the 3. The price was in uptrend. This is the 3 black crow candlestick pattern. This is the first bearish candlestick. This is the second, which is bigger than the first candlestick, and this is the third big bearish candlestick. The 3 black crow candlestick came, and the sellers became active, and the price dropped further, as you can see. So this was the 3 black crow candlestick. This was the opposite of the 3 white soldiers. I hope you have enjoyed this session and learned the candlestick pattern. Practice, guys, practice as much as you can. If there's any confusion or any doubt, or you're stuck somewhere, just let me know in the Q&A session. I'll respond to you as soon as possible. Thank you. Let's begin to our next lecture.